I caught 150 pips on gold trading NFP on Friday, and in this video I'm going to be breaking down how I caught the trade. And this strategy works for any market, any currency pair, any market you enter. This strategy works there. So if that sounds interesting, let's get on the chart. So to break down the trade, we have to look at the structure before NFP. So NFP Friday was here last week, right? So you see this dark blue color, it separates 1 week from another. So this is Monday, and this is Monday, this is another Monday, right? So it separates each week. So we're in the new week, and then this was last week, right? So last week Friday NFP, this was the NFP, right, that happened here. So before this happened, we have to look at the market structure before that move, before NFP. All right, so if you zoom out here on the 15-minute, let's go on to the 1 hour chart. So here on the 1 hour chart, what can we see? We can see that the market was going up, was in an uptrend, right, before NFP. So let's just draw this as an uptrend. The market was in an uptrend, right? So this was last week, right, coming from this lowest point of the week, right? So we can see that the market has been going up for several days, about 1, 2, 3, 4, 5, 6, 7, 8, 9 days. The market has been in an uptrend, right? So what I looked at was that since the market is in an uptrend, and I know that after 3 to 5 days of the market going in one direction, the market has to reverse, right? So the market can't just keep going up and going up and going up. It has to eventually either make a correction or reverse completely, right? So you can either reverse completely or just make an aggressive pullback, right? So what I saw here when I was looking at the chart was I saw three very telling things, right? So one thing you'll notice is you can see these fat aggressive candles, right? The market gave us 3 fast aggressive bursts, right? So this is the first one, this is the second one, and this is the third one, right? You can clearly see this on the chart, right? Now this, anytime you see candles like this, these are usually inductions, right? So what is basically happening is after 3 to 5 days of the market going in one direction, the market would tend to reverse, right? And they can also give you 3 aggressive candles like this. So this tells me that the market is about to reverse, especially at this point here, right? So after the market went up and up, right? So what happened is coming into this new week, we have Monday here. This is Monday, right? So if you just box out Monday like this, right, what can you see? You can see that the market has been going up for 3 days for the whole week. So this is the first day for the week: Monday, Tuesday, and Wednesday. Up, 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 right? So that's like 3 pushes from the start of the week, right? So if you look at this from a retail perspective, you can see that retail traders and most people will see this as an uptrend and will be looking for a continuation, especially coming during NFP, right? So looking at this, I saw that the market sets the high of the week, which is right here. So if you draw a line at this high of the week, right, so the market sets the high of the week and began to consolidate and go sideways. Now the purpose of this consolidation is to accumulate orders. I've explained how M&W formations work in my previous video, so let me just explain that now. So let's say we have an uptrend like this, right? This is an M formation. Market pulls back and begins to consolidate, right? Up, down, up, down, up, down, right? And then eventually the market will go back to that high. And when the market goes back to that high, it will then reject that high and then reverse like this. So this is your typical M formation. Now the consolidation that happens here happens for a reason, and the reason for that is for accumulating contracts. So what's going to happen is a lot of people are going to be seeing this as buys to follow the trend. Some people are going to be seeing this as sells to go against the trend, right? So a lot of people are going to be buying and selling in here, buy and sell, especially people that trade support and resistance when they draw their support and they draw their resistance, right? So when the market consolidates like this, you can box out the consolidation. You'll notice that there's going to be liquidity above and liquidity below, because of if people are selling, their stop loss is going to be above, and if people are buying, their stop loss is going to be below, right? So what happens is the market eventually goes to take out the stop loss above because they want to sell, right? So market makers want to sell, they have to induce people up and take out the people that are selling, right? Take out the liquidity, and then it eventually come to this high. Sometimes what you notice sometimes is they might throw a pin a shadow or a what's it called, a wick above this high to take out any person that puts their stop loss above here, right? And then once they take out that liquidity above, this is called the liquidity hunts, stop hunts, liquidity hunts, they make their move. Now, if we go back to the charts here, what can we see? The market has been going up, right? And then on Wednesday, the market set the high of the week, the highest point of the week, right? So most people are going to draw this as a resistance zone, and they're going to be waiting for the market to break this zone in order for them to buy. And then the market sets this high and pulls back and begins to what? Consolidate, right? This consolidate now is to cause confusion in the minds of people, because they don't know where the market is going to go to. Some people are going to be expecting the market to continue up, and some people are going to be expecting the market to continue down. So some people are going to draw a trend line like this, and they're going to see this as a downtrend, right? Some people might say this is a break of structure, and then they expect this to continue down with NFP, right? So if you go over to the 15 minutes, in fact, on the 1 hour chart, you can already see that during the NFP, this was the NFP candle, this candle right here. You can see that the market broke above this resistance zone here, right? So what happens when the market breaks a resistance? A lot of people begin to buy, right? So after NFP, a lot of people began to buy this. Now, if you go over to the 15 minutes chart, what you see is this is the NFP candle, this one here. This exact candle is the NFP candle. Let me draw an arrow there so you can see it clearly. This is the NFP candle, right? So when I saw this, the market was here like this when I saw this. And all I knew, as I saw this, I knew that if the market goes all the way up to this high, it's going to reverse, right? And I expected a stop hunt, but I didn't expect the stop hunt to be as volatile as this. I expected it to just like at least stop somewhere here. So what I did was I put a limit order right at the high like this, and I put about 36, 37 pip stop loss. And I actually put two orders. I put one there, and I put one at the high of the previous day like this, right? I put one like this. Both had the same stop loss target areas, the same, right? So what happened was, as the NFP came up, NFP went all the way up and hit my stop loss, right? And I was targeting these lows as a take profit area, right? The closest structure, which is here, right? So what happened was the market hit my stop loss, and then as I saw that I hit my stop loss, I began to wait, because I knew that this was gonna reverse. Like if this didn't reverse, I would have been surprised. So the moment the market hit my stop loss, I just had to wait for the market to reject. So when this candle began to reject and to push back down after setting this high, I then entered a sell somewhere here. Put my stop loss above, because they're not gonna go above this candle. And then I put my take profit down here. I still entered the same size that I entered on the first trade. Now, you might be wondering, why did I enter here? If you also look on the 5-minute charts, you'll see something very interesting. You'll see that there's an M formation here like this. Let me just clear everything out. So if you look at this, you can see this M formation here, and you can also see this larger M structure here. So you can either enter here or enter here on the second leg on the 5-minute charts. And not only that, if you analyze this well, what can you see? You can see that the market just consolidated here before the NFP, right? Broke to the upside, gave this M formation like this, and then reversed, right? And then came back in consolidation. This is the structure that I always teach, right? Consolidate, break out, M formation, reverse, come back, and end the day in consolidation, right? So let's go back to the 15-minute charts. So I entered this here, and in a matter of 1 hour, the market reversed and went straight to my target. All right. Another way to enter this on the 15-minute chart is you just wait for the candle to close below the high, right? So you can see that this candle closed above the high, and then the next candle waited there for about 15 minutes, and then the next candle closed below. Now, think about this. Why would the market makers, if they want to continue up, why would they give you this candle. You see this hammer, right? This hammer is to confirm to people that are looking for buys that this is going to go up. Now, because of this is a resistance zone, a lot of people are going to be buying this resistance, right? Chasing the markets as the market closed above the resistance, right? So a lot of people are going to be buying here, putting their stop losses all the way down here, right? And then this is a star formation. This is an entry candlestick. The purpose of this candlestick, this middle candlestick, this hammer here, is to wait, is to give you an extra 15 minutes for you to decide to make a decision. So the market closed above, right? Closed above here, and then give you this hammer to waste an extra 15 minutes for you to buy, to chase this NFP trade. So a lot of people can start buying here, buy here, buy here, buy here, right? Just for the market to enter back. The confirmation for me that this is gonna reverse is the moment that they entered back below, right? So why would they break above and then enter back below? That's a weird behavior, right? If you're gonna continue up, you most likely do like this and continue up. You don't do like this, right? So once you see this is a fake out, just sell, right? So you can sell here. I sold up here because I knew, based off of experience, I knew this was gonna continue down, right? So if you also look at one more thing before I end this video, if you look at this, this is the highest point for this week, right? Right. So the lowest point of last week, let's look at that if we see the same thing. Now, what can we see? We see that the market has been going down, right? Let's use the same analysis that we used for this one for this week. So the market has been going down. What happened? They set the low of the week here, right? And what happens? The market set the low of the week and then begins to consolidate, right? Build liquidity above, build liquidity below. Then what happens? So market makers build liquidity above here, build liquidity below here. Then what happens? They go down there, take out the liquidity, also coming and retesting this low of the week, also low of the previous week, because this is Friday and this is Monday. So they go and retest the low of the previous week, go back up, take out the liquidity above here, right? You can see, take out the liquidity above this high with this, and then go back and retest this low one more time, buy here, or you can buy here, and you can see that the market reversed completely for let's see, because this is a very volatile pair, it reversed for about 600 pips, right? So also on gold, I can expect this to also reverse and go all the way down here,